If you were asked to estimate the cost of life insurance, how accurate do you think you would be? My name is Eric Tarno, head of life insurance at Corebridge Financial, and in a recent survey, we put people to the test, and the findings are quite interesting. And it left me with some optimism on the opportunity in the life insurance industry. Of those surveyed, only 10% could identify the correct amount, with nearly a quarter of the respondents choosing an amount that was more than triple the actual cost. At the same time, cost is what Americans say are the main deterrent from obtaining a life insurance policy. Almost 40% say the cost is the top reason, and another 20% say they have more important financial considerations. And this is why I'm optimistic about the results, because there's clearly a knowledge gap that those of us in the industry all have a part to play to close. And if we do so, we're better suited to close the life insurance coverage gap, which we all know is imperative. Let's talk about how the cost of life insurance is determined. The primary drivers are the type of product and the amount of coverage. In general, the cost is linear to the amount of coverage, maybe with some savings as you buy more. For example, if you double your coverage, your premium is likely to near double. For the type of product, term products, which offer coverage for a period of time, like 20 years, are designed to pay a death claim if the insured dies during that period. For permanent products like Index Universal Life, coverage pays when the insured dies because the coverage is designed to last for the insured's lifetime. Beyond that, there are health and demographic factors specific to the applicant, like age, gender, health conditions, and occupation. These are important to understand the average life expectancy of the applicant, as well as some specific risk factors. For age, generally, the younger you are when you apply, the lower your premiums. This is why it's imperative to seek coverage sooner rather than later. For gender, statistically, women tend to live longer, often resulting in lower premiums. Your health plays a significant role. Insurers often require a medical exam to assess your overall health, including factors like blood pressure, cholesterol levels, and any existing medical conditions. Lifestyle choices and occupation matter too. If you smoke or engage in high-risk hobbies like skydiving, expect higher premiums. While there are many inputs that go into the cost of insurance, the fact remains that it's surprising just how affordable it can be. A healthy 30-year-old seeking 20-year term insurance coverage can pay as little as $13 a month. So if you're a customer, I encourage you to work with a financial professional to calculate the cost of insurance that's right for you. And if you're in the industry, I encourage you to play a part in shoring up the knowledge gap.